Alright, now we've arrived at Dragon Around the World. Today is Friday, and the program host is currently not on the US East Coast, but in Taiwan. For him, this arrangement makes it more convenient to release the program. Although there is still a bit of distance, his hometown is in Tainan. Alright, for most of the time in the past, there has been about an 11 to 12-hour time difference between him and us. Wang Mingyuan is now on the US East Coast. He is a native of Tainan and grew up there since childhood. As for his past outstanding achievements and his background as a gifted young man, I won't go into detail. I've already heard Wang Mingyuan proudly share about them several times. However, Wang Mingyuan is still in Tainan today, but we are proceeding as usual, presenting the program content in its full, authentic form. Here, joining us online now is Wang Mingyuan. Mingyuan, welcome. Hello everyone. Tang Xianglong just introduced me. Thank you. Actually, I grew up in the real countryside. Yes, really in the countryside. Before I turned 10, the house we lived in was right next to a military dependence village. Yes, I've heard you mention it. You're from Tainan City, right? No, I'm from the former Tainan County. Where is Tainan County then? It's just a small rural town. I'm not entirely sure myself. Are you worried people might go looking for you on purpose? Alright, let's leave it at that. After all, there's still quite a big difference between Tainan City and Tainan County. The house I live in now is the very one my parents moved into 50 years ago. At that time, it was a major improvement in our quality of life. I was 10 years old then, and we moved from living next to the military dependence village to a place about 100 meters away from it. It felt like a small upgrade, huh? I also heard Wang Guofeng mention this before. Of course, at our age, since Mingyuan is a few years younger than us. For our generation, childhood in the countryside back then was probably just like that. However, since you used to live in Tainan County, the development gap between Tainan City and Tainan County really still exists. Tainan City is relatively more urbanized and also has many historical sites. In comparison, Tainan County at that time seemed rather remote, and by the standards of Tainan City, that was indeed the case. Alright, we invited Mingyuan to the show today because his organizing work is very well structured. In fact, when you weren't here, I also mentioned this publicly. I once said that among all the guests on my show, only when Wang Mingyuan comes on do I feel a bit unsure about how to prepare, because the topics he specializes in are usually not areas I'm familiar with. However, there are two very important topics today. First, let's take a look at the current financial and economic situation in the United States. Although this is a topic we have discussed before. However, you can see that recently, in addition to releasing the National Security Strategy report that attracted global attention, Trump also spent about 20 minutes yesterday giving a nationwide speech, emphasizing and showcasing the economic achievements during his administration. Although judging from the poll results, most people don't seem very convinced, the economy is clearly still one of the most important issues in the United States right now. In terms of finance, we can see that the prices of gold and silver have risen sharply, while global stock markets generally remain at high levels. Most countries have adopted loose monetary policies, and the debt problems of many nations appear to be quite severe. At present, the global economy is closely linked to the US dollar and US Treasury bonds, but the overall situation still seems to carry a sense of unease. Next, we will discuss another topic, the previously mentioned Hongqi River project. That is, the construction project of the large bridge. The project known as the Hongqi Bridge is a magnificent valley-spanning bridge construction that showcases mainland China's outstanding strength and technical proficiency in the field of large-scale infrastructure. However, due to a landslide on the mountainside, the bridge unfortunately collapsed in the end. Of course, the monitoring system functioned well beforehand, and traffic control and vehicle evacuation were carried out in time before the bridge collapsed, so no casualties occurred. However, as a major project of high complexity and challenge, when such problems arise, there are indeed aspects behind them that merit thorough reflection and improvement. Therefore, I have set the topic as how to respond when rapid economic development encounters engineering challenges. However, today we will begin by discussing the current state of the U.S. economy. because this issue not only affects the United States, but also greatly troubles the entire world. Let me first review with everyone that the video format shared earlier on your program was quite similar to a typical talk show with commentators. So many viewers watched it with a relaxed and lighthearted attitude. Actually, this is not the best way to make full use of our more than 1 hour of time. Let me give 2 examples. The first was 3 months ago, when I spent about 2 minutes on your program mentioning that the United States had clearly been quietly shifting toward a Monroe Doctrine direction. But because time was limited, I only briefly explained 2 of the reasons at that time. The first example is that he renamed the Ministry of National Defense to the Ministry of War in September, and at that time I also explained the connection between this change and the Monroe Doctrine, as well as its accompanying implications. I also explained that his actions in handling the Venezuelan issue were overly proactive, and there must be a strategic guiding principle behind them as support. Therefore, about 3 months ago, perhaps almost no one in the world was mentioning the Monroe Doctrine, but I discussed this concept on your program, and the general audience may not have paid particular attention. However, I have been running my blog for more than 10 years and have a group of loyal readers who conduct fairly in-depth research. Therefore, they later carried out more detailed discussions, and we also engaged in further exchanges and exploration on the blog. I'd like to remind listeners first that if you're interested in hearing me share viewpoints that are rarely mentioned elsewhere, you can visit my blog to learn more. This not only helps you gain a deeper understanding of the issues, but also gives you a chance to grasp global trends earlier than others. Another example is that last month everyone was discussing how Trump had proposed 28 peace negotiation terms, so the public generally believed that peace talks between Russia and Ukraine seemed to be about to be reached. Let me briefly explain. This arrangement is only meant to help all countries smoothly come to the negotiating table. Since the situation last month was more pressing than it was 3 months ago, the timing is particularly crucial. Therefore, I did not give a particularly detailed explanation at the time. However, some longtime readers of my blog left comments there asking whether simply getting to the negotiating table would lead to tangible results. I replied that this was almost impossible. The 2 countries coming to the negotiating table is, in fact, merely a strategic move aimed at influencing relations between the United States and Europe. Therefore, this situation still needs to develop until the final outcome becomes clear. So, when will the true critical moment arrive? That is, when Europe truly faces shortages of manpower, funding, and armaments. The strategic goals of the 2 countries may then focus on controlling key areas in eastern Russia. This is exactly the point I have been making for more than 3 years. Once the 2 countries began partial mobilization, that is, after September 2022, it was almost certain that if Russia failed to gain full control of the eastern region, Putin would be unlikely to end the operation. If the Ukrainian side is willing to make concessions through negotiations, that would be the most ideal outcome. But the reality is that without changing the current governing system, it is almost impossible to achieve the goals, because this regime carries characteristics of an extreme ideology. His real political foundation mainly comes from groups with extremist tendencies, so the development of the situation must prompt the relevant influential forces to gradually withdraw. In fact, after I appeared on the program last month, some readers already raised questions about this matter, and I had given a detailed explanation at that time. Therefore, the content I am discussing today is deeper on a professional level and even more specialized than typical topics related to international strategy. If you have any questions, I suggest that everyone check the blog to see whether experienced readers have raised similar issues. I will provide a detailed explanation there. The topic we are going to discuss today is actually a continuation and deepening of the subjects explored in the past few months, or even years ago. First of all, I mentioned in the past 2 or 3 months that I predict the United States may experience its next financial crisis sometime between around 2028 and 2030. I also mentioned that, to avoid this crisis, the ideal situation for the United States would be to follow Japan's example over the past 3 years and reduce the size of its national debt by a little more than 20%. Measured against GDP, Japan's total national debt was originally a little over 250% of its GDP, but after 3 years it has fallen to around 230%. This result was achieved mainly through a real interest rate of about -3%. What is the real interest rate? It is the difference between the nominal interest rate and inflation. For example, if the deposit interest rate for the public is 0.5%, while the actual inflation rate is around 4%, then the real interest rate is reflected in the gap between the two. Therefore, your real purchasing power decreases by about 4% each year, but the deposit interest rate is only 0.5%, resulting in a real interest rate of around -3%. So how exactly is this money being released? This mainly comes from the American middle class, who, influenced by the East Asian cultural emphasis on saving, have developed a habit of diligent saving. As a result, the middle class has accumulated savings amounting to tens of trillions of dollars. The real value of these savings decreases by more than 3% each year, and after 3 years, the total value is reduced by about 10%. This roughly 10% of the funds is essentially used passively to fill the gap in government bonds. So the ratio of government debt to GDP has fallen from around a little over 250 to about 230. However, whether the losses borne by the middle class are entirely used to repay the national debt is still worth deeper consideration. That is not the case. Japan's low interest rate policy, whether amid soaring inflation or near-zero interest rates, has given rise to a rather unique economic phenomenon. This phenomenon had already emerged 30 years ago when I was working in the financial industry and had a posting in Tokyo. This type of operation is known as a carry trade. The so-called carry trade originates from Japan's financial operation model. This is because, since the collapse of Japan's economic bubble in 1990, the country first went through what was called the lost decade, which then extended into 20 years, 30 years, and has now lasted for 35 years. During this long period, Japan's interest rates continued to decline, and the downward trend in interest rates also caused its exchange rate to gradually weaken. When both interest rates and exchange rates decline simultaneously, their differences with those of other countries can be analyzed and leveraged for decision-making and operations. The principle is actually quite simple. Suppose I go to Japan to borrow a sum of money, and the interest rate I need to pay is 0.5%. In fact, over the past 30-some years, Japan's interest rates once fell into negative territory and stayed close to zero most of the time. I hardly had to pay any interest, while the yen kept depreciating. Therefore, when I repay after 5 years, the real interest rate is actually negative. I mentioned earlier that the real interest rate faced by Japanese consumers is the nominal interest rate minus the inflation rate. However, from the perspective of international financial institutions, the so-called real interest rate refers to the Japanese interest rate minus the average interest rate of the international market, because the purpose of these funds is to invest in the global market rather than to be spent within Japan. Therefore, when he borrows in Japan, he needs to take into account the lending interest rate while also deducting the impact of exchange rate fluctuations. Since the exchange rate was previously mentioned to be depreciating, the real interest rate thus becomes even more negative. For example, suppose I expect the exchange rate to fall by another 5% over the next 5 years. In that case, a nominal interest rate of 0.5% would effectively turn into a real interest rate of about -4.5%. Then, the funds were invested in the stock market, as their scale reached several trillions of US dollars. Funds can flow into the stock or real estate markets. For example, in places such as Canada, Australia, and New Zealand, investment activity in the real estate market is very active. A considerable portion of these funds has mainly come from Japan's carry trade over the past 2 or 3 decades. If these funds are invested in real estate, stocks, or other high-risk financial products and earn an annual return of about 5% to 8%, these gains can be compounded with the effect of negative interest rates on borrowing. Therefore, it is possible to earn returns of more than 10% each year, which has been one of the key reasons why the U.S. financial industry has been able to generate substantial profits over the past 3 decades. Ordinary people often only see the United States continuously releasing dollar liquidity, injecting large amounts of dollars into its financial system, which subsequently drives the prices of various high-risk assets to keep rising. However, in fact, another major source of liquidity funds comes from the Bank of Japan. The carry trade mechanism I mentioned earlier has already been ongoing for more than 30 years. Over the past 30 years or so, this type of operation has usually been translated into Chinese as arbitrage trading. Among them, arbitrage corresponds to the English word arbitrage, but as for the term carry trade, I am not entirely sure what its most appropriate Chinese translation should be. The so-called carry trade is a form of arbitrage transaction, which involves borrowing low-cost yen funds and then investing the capital in other markets, rather than using it for domestic consumption or investment activities in Japan. However, the key issue with the carry trade lies in its assumption that Japan's interest rates will remain low for a long time. The returns from this type of arbitrage operation mainly come from three sources. First, when a large amount of capital flows into overseas markets for investment operations, the massive movement of funds drives up the prices of related assets. Second, because the yen's borrowing interest rate is extremely low, almost close to zero, the cost of capital becomes very cheap. Third, the market generally expects the yen exchange rate to continue weakening, or at least not to appreciate significantly. These three factors form the basic assumptions that allow carry trades to function. In fact, over the past 35 years, Japan's interest rates have gradually declined, and the yen's exchange rate has shown a continuous downward trend. However, the reason I am focusing on this topic today is that we are at a critical turning point, and global financial trends are about to take a new direction. One of the reasons for this shift is that over the past 3 years, Japan has faced increasing economic pressure on the middle class, making it difficult for them to bear the current burden. As I just mentioned, when personal savings shrink by about 3% each year, while bank deposit interest rates are only around 0.5% or even lower, the prices of daily necessities continue to rise sharply. This has led to a phenomenon of imported inflation, the main causes of which lie in exchange rate fluctuations and excessively low interest rates. As a result, financial capital from various countries actively engaged in carry trade operations, which also included Japan's major financial groups. As a result, the yen exchange rate was affected because when investors borrowed in yen, they had to first convert the funds into US dollars before making overseas investments. Therefore, it is necessary to sell yen and buy US dollars. The large flow of funds creates a positive cycle that further drives the yen's continued depreciation, thereby continuously increasing the returns of the relevant investors. However, the situation has changed. Japan's economy no longer enjoys the significant export surplus it had 2 or 3 decades ago. At present, the proportion of imports in its consumer goods and major basic commodities is gradually increasing. When the yen's exchange rate continues to decline, it will be difficult to keep domestic prices effectively under control. As I mentioned earlier, Japan's current real inflation rate is around 4%. In fact, the inflation rate felt by Japanese consumers is often higher than the official figures, meaning that price increases at the retail level are more pronounced. This is mainly related to the structure of interest groups within Japan. It's just a feeling, as if I've been working hard and struggling over the past few years. When he sees overseas distributors earning substantial profits due to financial policies, he also feels the urge to follow suit. After all, they themselves need to purchase the raw materials and supplies required for production. For example, rice growers must buy fertilizer, and the price of fertilizer is also rising. He thought to himself that since the current government is indifferent to the plight of middle-class consumers, he could only go along and raise prices. This chain reaction is a microcosm of Japan's economic phenomenon over the past 2 years, and viewed within the broader context, this series of changes appears entirely reasonable. As a result, the inflation faced by Japanese consumers is not entirely consistent with the inflation reflected in the overall economy. The overall economic inflation rate has remained at around 4% per year. The actual inflationary pressure borne by Japan's genuine middle-class consumers is much higher than this level. Just think about it. The price of rice has already risen 3 or 4 times, yet it is still in short supply. This is mainly because domestic interest groups have taken advantage of their market monopoly position to obtain extra profits during this period. This type of inflation should originally be a result shared by everyone. But some groups with monopolistic means consider themselves to have an advantage and take the opportunity to gain more profits. After more than 3 years, the Japanese people can no longer bear this kind of pressure. After the pressure became unbearable, just 2 or 3 weeks ago, the governor of the Bank of Japan finally stated publicly that they were preparing to start raising interest rates. The result of this interest rate hike immediately changed 2 of the 3 profit conditions in carry trades. First, interest rates rose. Second, the rise in interest rates further drove up the exchange rate. This situation has forced a reversal in carry trades. Financial practitioners often have an exceptionally keen sense of the market and can quickly perceive signs of change. As a result, carry trades worth tens of trillions of US dollars began to shrink rapidly, leading to a noticeable reduction in the funds used for speculative financial assets in places such as the United States, Australia, Canada, and New Zealand. This means that the bubbles in these financial assets are, in essence, bubbles driven by the US dollar. The circulation of the US dollar is excessively large, which is reflected throughout the financial and economic systems. Almost all financial asset prices continue to rise and exhibit bubble characteristics. Of course, there are differences in timing, and at present, the most prominent bubble is in assets related to artificial intelligence. The scale of the related funds has indeed reached tens of trillions of US dollars. Today, the reversal of arbitrage trades is precisely one of the key factors I previously mentioned that mark the economy beginning to turn at a critical crossroads. Let's take a look at the Bank of Canada's latest statement. They expect that around 2026, they will no longer make further interest rate cuts. The attitude of the Reserve Bank of Australia is more proactive, similar to Japan's stance, indicating that an interest rate hike cycle is expected to begin around 2026. The emergence of these situations is mainly because signs of inflation have become evident or because people find it hard to bear the pressure of rising prices, so policymakers must shift to a more hawkish monetary policy stance. The so-called hawkish stance of a central bank refers to a policy approach that focuses more on curbing inflation rather than prioritizing the prevention of an economic recession. Forget it, it's fine if we don't watch it. So, what was happening in the United States at the same time? In fact, over the past few months, especially last month, I heard some reports suggesting that the actual state of U.S. economic growth is not as bad as the headline data indicates. For example, Paul is the chair of the U.S. Federal Reserve, and he recently mentioned that the data he pays the closest attention to is the non-farm employment indicator. He pointed out that, overall this year, the non-farm employment growth data has been overestimated by about 60,000 people each month, so the actual growth needs to deduct roughly 60,000 from the figures. But if we look back carefully, he actually provided a detailed explanation of why the data was overestimated. This is because the non-farm employment statistics are inherently quite complex, involving many hypothetical factors. He stated that, based on the linear assumption in the model, the monthly data would be overestimated by about 60,000 people under the current circumstances. Looking back at this year's non-farm employment growth rate, the actual increase has averaged around 40,000 people per month. According to this simple logic, much like basic mathematics, the United States non-farm employment has actually decreased by about 20,000 people per month on average this year. This situation is indeed quite severe. I mentioned last month that I expected the Federal Reserve might cut interest rates in December because the actual economic situation in the United States is quite severe. It is clear that Powell is currently in a difficult balancing position. Cutting interest rates too much could trigger inflation, while raising them too much could lead to an economic recession. However, since the overall economy is clearly moving toward a recession, I predicted last month that Powell might start cutting interest rates, and in fact, he has indeed taken rate-cutting action this week. At the time of the interest rate cut, we can refer to the non-farm employment situation he previously mentioned, which is one of the noteworthy points. Another perspective is that you can refer to a report published by an investment bank. After their analysis, They pointed out that if the trillions of funds currently invested in the field of artificial intelligence are taken into account, this is indeed a rather serious situation. For example, Oracle plans to invest nearly $100 billion this year in building data centers related to artificial intelligence, which shows that its development scale is quite large. However, if the investment of several trillion dollars is excluded, the situation would be different. Of course, the funds invested themselves have also brought a certain level of efficiency and additional benefits. In the process of building factories, purchasing raw materials, and buying electricity, these expenditures not only stimulate economic growth, but may also further increase inflationary pressures. For example, the supply of computer graphics cards has already been affected to some extent. The reason is that these artificial intelligence data centers have made large-scale purchases and occupied global memory resources, leading to tighter supply and demand in the market. Therefore, memory prices have quadrupled over the past 6 months. It is imaginable that this has undoubtedly stimulated economic growth, as the same memory products can now be sold at 4 times the previous price. So, has this part of GDP also grown fourfold as a result? However, at the same time, it has also brought about a more pronounced inflationary effect. Therefore, as I mentioned earlier, investment bank research reports indicate that if the trillions of dollars invested in the field of artificial intelligence are excluded, the actual performance of the U.S. economy may have approached zero growth, or even shown a downward trend. This is completely consistent with what POW mentioned about the negative growth in U.S. employment numbers. In addition, in fact, a week ago, namely last week, the market generally expected that POW would announce an interest rate cut this week. However, everyone is still paying attention to another set of the latest data. This data was released 2 days ago, that is, on Wednesday, and it concerns the unemployment rate for November. This unemployment rate data shows that the U.S. unemployment rate has remained at around 4% over the past 2 years. However, analysts have also provided a reference range for it. This statement was not made only after the data was released. Rather, during evaluations conducted by professional researchers last weekend, it was pointed out that in the worst-case scenario, the unemployment rate could reach 4.6. It is almost impossible for it to exceed 4.7, and even in the least favorable situation, it would only reach 4.6. And right now it is indeed 4.6. That's right. The data released 2 days ago was exactly 4.6. This coincides with the time when the Federal Reserve announced the rate hike that day, so there may be some correlation between the two. That's right, so he had actually seen this data long ago. According to procedure, such information is first sent to the White House 2 days before its official release, and then distributed to the relevant departments the day before. The reason I know this process is because a family member of mine once worked at the White House, handling related data. That's great. Your son works at the White House. How wonderful. All right, let's continue. He is mainly responsible for handling economic data at the White House. After graduating from university, he once interned and worked at the White House for a period of time. Therefore, it can be seen that these situations do not have a clear direction. The current economic situation in the United States is actually quite severe. So, what are the causes of this situation? This is mainly because the U.S. economic structure itself has already been relatively fragile. In addition, policy actions such as the tariff war launched by the previous administration have made the overall situation even more difficult, and it can be said that the country has gone through quite a struggle. Alright, so even though this Federal Reserve official has such a style of conduct, he is actually still quite a cautious bureaucrat. Throughout the past year, he has been resisting the previous government's attempt to artificially lower interest rates. The former government, disregarding inflation, tried to influence the exchange rate by cutting interest rates, believing that a weaker currency would help bring manufacturing back onshore. Therefore, he did not pay much attention to it. Some people pointed out that such an approach might lead to a decline in the US dollar exchange rate and trigger inflation, but he did not pay attention to the risk of inflation. Now, let me first provide some additional explanations for everyone. For bulk commodities or consumer goods of this kind, the impact of inflation often differs depending on the level of wealth. The wealthier a person is, the less sensitive they are to such price changes. For example, I drink only 1 glass of milk each day. You think Bill Gates' wealth is 10,000 or even 100,000 times greater than mine, but can he drink 10,000 or 100,000 times more milk because of it? Therefore, this type of inflation actually affects ordinary people the most, especially the more vulnerable groups within the middle class. The wealthier a person is, the less they are affected. The former government leader's view reflects the typical stance of the affluent class. Therefore, he is not particularly concerned about inflation, focusing instead on promoting the return of manufacturing and lowering the exchange rate. It is worth noting that the economic environment Japan is currently trying to escape from is precisely the state that the United States hopes to enter. Actually, I already mentioned this matter last month. The policies Japan has pursued over the past 3 years at the cost of inflation have actually placed a burden on the middle class. On one hand, they ease the pressure of national debt, while on the other, they benefit certain large corporations. Isn't this quite similar to the direction once desired by former U.S. leaders? Therefore, Paul, as a legal professional who came from the U.S. Federal Reserve System, demonstrates a typical bureaucratic mindset, meticulous and thorough in practice. Although the so-called bureaucratic mindset is not in itself a praiseworthy trait, compared with the previous government leader's restless and aggressive style, this cautious and steady approach appears particularly valuable. Therefore, over the past year, he has been strongly criticized because he refused to let inflation run unchecked, insisting instead on curbing and resisting it. However, the reality is that the economy has already shown signs of sliding toward recession, and its overall condition is as precarious as walking on a tightrope. Therefore, he had no choice but to raise interest rates. On further thought, his term will expire in May next year. As for the topic that people are currently discussing and speculating about, who will succeed him, I do not intend to take part in that discussion. This matter has even prompted various prediction activities, which those interested can look into on their own. However, regardless of who ultimately stands out, the expectation is that the chosen candidate will be someone whose stance leans more toward that of the previous government and who may adopt a more accommodative, rate-cut-oriented policy. The pace of interest rate cuts will only accelerate and is unlikely to slow down. Therefore, as I just mentioned, countries around the world have generally begun raising interest rates to stabilize and strengthen their exchange rates. Only the United States is in a situation that seems to be rapidly declining, cutting interest rates at an increasingly faster pace and continuously suppressing its exchange rate. It can be imagined that when the degree of reduction reaches a certain point, as I mentioned earlier, we are at a critical crossroads and have already made a directional shift. This shift means that the US dollar will enter an acceleration phase, accompanied by changes in the interest and rate differentials, which will in turn drive a realignment of exchange rates. Therefore, it can be expected that between 2026 and 2027, the US dollar may experience depreciation, accompanied by inflationary pressures. No matter how impressive the surface data may appear, the currently displayed figure is around 3%, but in fact, if we look closely at more accurate indicators, the value is a little over 4%. One of the key points I often mention is inflation in the retail and service sectors. Since the U.S. inflation rate is divided into dozens of categories, there are several indicators that can more accurately reflect the actual situation. In any case, even if the more precise data indicate that the inflation rate is around a little over 4%, the actual inflation situation may still be higher than that figure. What I mean by the actual inflation rate refers to what middle-class consumers truly experience, because this phenomenon still carries considerable uncertainty. Over the past several decades, the methods used to calculate inflation have undergone significant changes. They are no longer aimed solely at pursuing accuracy, but are instead influenced by policy and image considerations, a situation that is common worldwide. Let me give a more distant example, such as computers. According to the current method of calculating inflation, today's computers have improved thousands of times in performance and cost-effectiveness compared with those from 20 years ago. Therefore, this method of calculation effectively compresses the influence of 3 factors, resulting in an overall decline in the prices of similar electronic products. According to this reasoning, today's iPhone is about 5,000 times more capable than a phone from 20 years ago, while its price has increased only about fivefold. From this perspective, it is equivalent to experiencing roughly a 1,000-fold deflationary effect. But if you think carefully, from the consumer's point of view, when using an iPhone today compared with a phone from 20 years ago, has its actual consumer value really increased by 5,000 times? Not really, right? That's actually just a data illusion caused by the calculation formula. Therefore, if we really compare today's iPhone with a phone from 20 years ago, claiming that their value differs by 5,000 times, probably no one would be convinced. Perhaps a 100-fold difference might still seem reasonable, but saying 5,000 times is indeed an exaggeration, so everyone should be prepared for such a situation. However, Trump does not particularly care about these factors. He is more focused on the stock market, and the main force driving the market's rise at the moment is artificial intelligence. I just mentioned that Paul is still somewhat concerned about inflation, so he has held back until now before starting to express his views on the matter. In addition, another event has occurred over the past month, the Ripple market in the United States. By the way, how should the word Ripple be translated into Chinese? If the audience has any questions, they can look back at the series of articles I published in 2019. The so-called Ripple crisis was actually the reversal of the financial turmoil that occurred from September to October 2019. The so-called Ripple actually refers to the financial operating model involved when an institution is not an official bank, but belongs to what is known as the shadow banking system. When cash flow problems arise, you must use assets as collateral to obtain cash. The so-called Ripple market is actually a venue for conducting such collateralized transactions, essentially similar to a pawnshop mechanism. This is a financing platform specifically designed for secondary financial institutions. If the Ripple market encounters problems, it means that this financing channel will temporarily cease to operate. Why would this happen? Because the cash in his hands has already been exhausted. As a result, the entire financial system, especially the secondary participants on the periphery of the U.S. financial system, may face a shortage of liquidity. From the Federal Reserve's perspective, this situation means that it is necessary to increase the supply of funds to the market because the available cash within the entire financial system has already become insufficient. When the market experiences a shortage of liquidity, the surrounding shadow banks, informal financial institutions, also tend to face cash shortages. Moreover, this situation is not only about shadow banks lacking cash. Even major core banks with open accounts have shown reluctance to lend at low interest rates. Even major core banks have already begun to be affected, and the entire financial system is experiencing a clear shortage of liquidity. Therefore, in October 2019, a similar liquidity tightening event occurred again. As a result, the Federal Reserve, which was implementing a quantitative tightening policy at the time, was affected. After 2008, the Federal Reserve injected a total of about $5 trillion and then began to reduce its assets. When the reduction reached about one-third, it encountered this liquidity crisis. The Federal Reserve then promptly adjusted its policy, swiftly shifted course, and reactivated quantitative easing measures. When I observed this event in October 2019, I predicted on my blog that there might be a risk of inflation within the next 2 to 4 years. And this inflation crisis did occur 2 years later, in 2021, which also confirmed my strong criticism at the time of the relevant policymakers' performance. When the U.S. inflation rate rose to about 7% to 8%, Gang took a policy approach contrary to the mainstream by further depressing the exchange rate that should have been raised. This approach has, to some extent, harmed the country's economic and strategic interests. From a strategic perspective, only when the U.S. financial system faces significant pressure may the global monetary landscape change, in order to ease the Federal Reserve's asset burden. I believe this is one of the gravest mistaken decisions in the past 80 years, second only to the events during Wang Jingwei's period. The current situation has almost brought us back to the state of 2010. Just think about it. From 2019 to 2021 is exactly 2 years, which also fits within the 2 to 4-year range I predicted at the time. I have always believed that the next major economic crisis may occur between 2028 and 2031. Now, there are only 2 years left until 2028, and the situation is almost exactly the same as back then. The developments to come also bring to mind similar scenarios in which Paul reappears. A further comparison reveals that over the past 2 years, he has also implemented some quantitative tightening measures. Due to the implementation of quantitative easing policies from 2019 to 2020, approximately 4 to 5 trillion US dollars of new funds were added to the market, causing the Federal Reserve's balance sheet to once climb to a peak of nearly 9 trillion US dollars. In 2017, the previous peak was about 5 trillion US dollars. By 2022, the second peak had risen to about 9 trillion US dollars. I once mentioned that back in 2019, after he had just cut 1/3 of the scale, there was already a shortage of cash. Later, although about 5 trillion US dollars were invested, only 1/3 of it was recovered, and the remaining 2/3 ultimately failed to be effectively utilized. Alright, these resources have been wasted in vain for the US economic and financial systems, ultimately flowing only to certain individuals or institutions. So, will the same situation occur this time as well? Exactly the same. You're welcome to like, subscribe, share, and support the Mingjing and Diandian programs. In the initial situation, others need to make 3 to 4 transactions to achieve the same result. Enhance the overall atmosphere, learn to use whisper flow, and accelerate collaboration with artificial intelligence by 4 times to help the system better understand your needs. As long as I have a mobile phone, a computer, and a Wi-Fi connection, I can use the 7 Circles investment strategy to build my own source of passive income in US dollars. When I used to work as an engineer, I earned about 4,000 Malaysian ringgit per month. Now, over 3 months, I make a bit more than 3,000. The difference is, one is calculated in US dollars and the other in ringgit. Next, the time cost I put in is indeed significantly different. If you're also a professional, I'm sure you can understand how that feels. The money we earn through overtime and extra effort still isn't enough to bring us financial freedom. Why is that? In fact, I realized the existence of this problem long ago. I tried many different methods and later discovered a tool called Qichuan. It helps me build a stable source of passive income in the US market. It's not just me. My students, professionals from various fields, retirees, and homemakers can all use the Qichuan method to build passive income denominated in US dollars. But I want to be honest with everyone. Each person's results will vary, mainly depending on whether you approach it with a serious attitude toward learning. You might be curious why I choose to use this tool called 7 Circles. In fact, 7 Circles is quite outstanding. Its operating model is different from approaches like investing in real estate or running short-term rental platforms such as Airbnb. If you take that approach, it usually requires a considerable investment of capital and time to wait for returns. The tool 7 Circles, however, has 3 main advantages. The first advantage is that you can get started without investing a large amount of capital. You might ask, is it still suitable for us to invest in US stocks now? After all, the market has been quite volatile recently, and both the stock and bond markets have been unstable, making the overall environment seem uncertain. Precisely because of this, you should make flexible use of options, as options are a tool that can help you find profit opportunities even when the market declines. The third question might be whether investing in options requires frequent monitoring or trading. In fact, that's not necessary at all. The advantage of options is that I can earn a stable monthly passive income without spending a lot of time on monitoring. So, how did I discover such an attractive investment method? I must give special thanks to my mentor and friend Dr. Kose, an Indian professional fluent in Mandarin who once worked in Singapore. At that time, he told me that because he was busy with work, he hardly had any time to have dinner with his mother, and even though he earned money, he still felt it was quite exhausting. Therefore, he decided to learn options investing. At that time, I was also working hard at a part-time job. Although I earned some money, it was always difficult to save any. So I decided to learn together with him. After studying with him for a month, I earned a few $100s for the first time in my life, and that was the starting point of my profitability. Afterward, I kept working hard, and within just 1 to 2 years, my earnings gradually increased from a few $100s at the beginning to $1,000, continuing to grow steadily. I found that this gave me hope. It meant I no longer had to go to Singapore for work, yet I could still accumulate the necessary funds and financial resources to achieve my goals. After I achieved my goals through the method of options, I began sharing this experience with my friends around me. I have a friend who is about to retire. In the past, he followed stock market information every day. Now he often shares with me how he finds investment opportunities and earns passive income in US dollars through options. I also have a friend who is a housewife. In the past, she often worried about how to share the household expenses and help her husband increase the family income. Now she is able to use the stable income generated from options to share the household expenses each month and help her husband. There is another student whose Facebook posts I see almost every day, sharing photos and stories from his travels around the world and enjoying a life of global adventure. Through such efforts, he has gradually built up his own investment portfolio over the years and used options to generate passive income in US dollars. And the most surprising thing is that these friends actually had no investment experience at all when they first started. They all took action step by applying the ABC 3-step investment principle, using option strategies to enhance returns while reducing the risks of investing in US stocks, and ultimately succeeded in achieving their financial goals. If you are interested in US stock options investment but are still unsure how to get started, I will be holding a 2-hour training session. You might wonder, can this really be effective? Is that okay? I'm clearly a beginner and don't understand anything. Why do you want to teach me? Actually, I had the same question as you at the beginning. But later I realized that options and stocks are not completely zero-sum investment instruments. As long as you have the relevant knowledge, opportunities in the market are always there. By applying this knowledge, you can gain profits from it. So, why not grow together and create value collectively? Today, I would like to share with everyone my own experiences and the knowledge I have learned. It is through these efforts that I have gradually achieved my own results. In this 2-hour training session, I will share with everyone the current market fluctuations. After the election, the exchange rates of the US dollar, other currencies, and the Malaysian ringgit have all declined. First, choosing the right company to invest in is a very important first step. Second, by using appropriate option strategies, you can earn stable passive income in US dollars in the market. The third point is to learn how to control risk, because risk management is crucial. Investing should not subject you to significant losses, but rather help strengthen your assets through appropriate strategies. I will fully and transparently share all of this content on my 2-hour Patreon course page with students who genuinely want to learn and strive to achieve their financial goals. If you have tried various methods, but still haven't achieved stable returns and are still trading time for money, then I suggest you don't miss this training course opportunity. I have witnessed many participants, after attending this training course, learn how to apply option strategies in the US stock market to gradually build and earn a stable monthly passive income. However, the number of places in this training course is limited and it is not open to everyone. I hope to attract those who are truly determined to learn and eager to achieve success in the field of investment to join this course. I sincerely welcome you to join this training course. Please find the registration link below the video and complete your registration. See you in the class. Ming Pao, Canada Mandarin. Over the past 2 years, the United States has experienced a quantitative tightening of about 1/3. Currently, the Federal Reserve's balance sheet stands at around $6 trillion US dollars, which means there has indeed been a contraction of nearly 1/3. Then, the cash disappeared. Therefore, you can observe the patterns of how it operates. The functioning of the U.S. financial system mainly revolves around currency issuance, liquidity release, and the circulation of capital. A few years later, when you want to recover your funds, you may only be able to get back about 1/3, while the remaining portion will be difficult to retrieve because 2/3 of it has already been lost. Logically speaking, The Federal Reserve should adjust its course this time based on its previous policies and reintroduce quantitative easing. However, the actual situation is not ideal. At present, the economic condition and international standing of the United States are both difficult to compare with those of 6 years ago. Therefore, he does not dare to publicly mention implementing a quantitative easing policy. He implemented a policy that was not formally quantitative easing, but had a similar practical effect. What is the difference between the two? In essence, it was still a shift from tightening to easing, increasing the money supply to purchase U.S. Treasury bonds, with an overall operation that was almost the same. Then you might ask, why isn't this approach considered quantitative easing? Because before 2019, most of the purchases were long-term government bonds. Quantitative easing had been implemented for more than 10 years, and the government bonds bought during that period were mostly long-term in nature. This time, however, what was purchased were medium and short-term government bonds, so he claimed that this approach was different from previous practices. In fact, the reason he made such an adjustment, apart from wanting to use it as an explanation to avoid being seen as engaging in quantitative easing, is that the U.S. Treasury issues government bonds essentially for the purpose of raising funds. Since 20 years ago, people have generally believed that the longer the term, the better, which is also a reasonable approach. Right? If I want to borrow money, of course I would prefer a longer term, as that can reduce future uncertainties, such as the impact of interest rates or economic fluctuations. If the borrowing term is only 1 to 3 years, you'll have to take out another loan when it matures, and the amount of funds will keep accumulating and increasing. After repaying the previous loan, it is still necessary to refinance that portion. In addition, new fiscal shortfalls and deficits must also be financed through additional borrowing. If 1 trillion is borrowed this year, it may need to increase to 1.5 trillion in 3 years. If this accumulation continues, there is indeed considerable risk. However, the U.S. side does not seem particularly concerned. Over the past 5 years, they have basically cast aside their original discipline. Therefore, at this stage, the U.S. Treasury's financing focus is mainly on short and medium-term borrowing. Why is this the case? Because long-term interest rates mainly reflect the market's expectations for inflation, while short and medium-term interest rates are primarily influenced by the annually set overnight rate. That is, the changes in daily interest rates. Because if you calculate it on a daily basis, adding up about 300 times would be roughly equivalent to a year, right? The annual interest rate is mainly influenced by the overnight rate, which is usually determined and adjusted by the policies set each year. Long-term interest rates mainly depend on the expectations of investors in the market regarding inflation. Therefore, under normal circumstances, short-term interest rates are lower than long-term interest rates. Especially now that the United States has entered an interest rate cut cycle and has been in a phase of lowering rates over the past 2 years, short-term interest rates naturally appear more appropriate. Although the two seem not very different, the current short-term interest rate is slightly below 4%, while the long-term rate is slightly above 5%, so in fact, the gap between them is not significant. However, they still loosened the restrictions related to interest rates and began shifting the focus of government bond allocations towards short-term returns. I believe this trend became more pronounced after Trump took office. I believe the main reason is that the United States, as the dominant global power, holds a relatively confident attitude toward potential risks. In other words, I don't have to make serious forecasts, plans, or strictly follow discipline. After all, once a problem arises, I can simply use coercive means to shift the losses onto others. Look at the current trade tariff policy. America's manufacturing industry has been clearly affected, and its momentum of development is no longer what it once was. He can use strong measures to shift these costs onto Taiwan, Japan, and South Korea. If future government bond interest rates turn unfavorable for him, he may call on these so-called allies and ask them to purchase long-term or even century-long government bonds. Isn't this already a very clear explanation? There's really no need to make any further preparations or plans in advance. So, the way the United States governs is actually like a kind of willful governing style. especially since every time it stirs up commotion, it always seems to gain some benefit from it, doesn't it? I just mentioned that the Federal Reserve has actually already begun implementing a quantitative easing policy. Therefore, I believe everyone should have no further questions about what I shared today. By December 2025, we will be entering a new turning point and opportunity. This also means that the United States has shown a certain degree of regression in terms of discipline, prudence, and risk management. Next, there was a clear turning point, even a rather drastic change, in global interest rate differentials and exchange rate trends. I would like to explore the implications of this from an investor's perspective. Recently, I saw a rather interesting chart last month that showed the asset allocation of US dollar investors. Of course, US dollar assets can also be allocated to some high-risk or speculative targets, such as digital assets like Bitcoin. The relatively speculative target is the stock market, while a more stable choice is long-term government bonds. As for the safest and most conservative allocation, it would be cash or cash-equivalent assets, such as short to medium-term government bonds. Since these types of assets can be redeemed within a year, the actual risk over that one-year period is relatively limited. Therefore, compared with holding 10-year or 30-year government bonds, their risk is significantly lower. So, what does the picture I'm looking at show? In other words, in asset allocation, the proportion of cash and cash-equivalent assets fluctuates, with the peak reaching around 25%. When the economy returns to normal and the stock market becomes active again, the proportion of cash and cash-equivalent assets usually declines. This is because the return on cash is limited and people tend to invest their funds in the stock market, which may offer higher returns. So under such fluctuating conditions, do you know approximately what the current ratio is? The current ratio is about 25%, which corresponds to the peak level of the historical average. However, if we look back at past peak periods, we find that almost every peak occurred within a year after the end of an economic crisis. For example, the last peak occurred in 2009, during the time of the global financial crisis. The entire investment market collapsed, and the stock market also fell sharply. After being forced to stop losses and exit, investors generally believed that the stock market had not yet bottomed out and rebounded, so the proportion of cash and cash-like assets reached its peak. So, has an economic crisis occurred yet? The answer is, not yet. Has a downward trend appeared yet? Not yet. The stock market continues to reach new highs, and market speculation remains lively. At present, the asset allocation ratio has reached 25%. This indicates one thing. The current situation represents an unprecedented new pattern. The financial system is facing major structural changes, which are no longer just ordinary fluctuations, but may lead to a clear divergence. Why has the proportion of cash allocation reached its highest peak? In fact, the U.S. economy can be described with one word. It shows a polarized characteristic. In other words, it follows what is called a K-shaped trend. The wealth gap is widening, with the strong growing stronger and the weak growing weaker. This description is often used to analyze the current situation of the U.S. economy. At present, descriptions of the U.S. K-shaped economy are quite common. Over the past 2 or 3 years, similar K-shaped development trends have also appeared in the country's financial and investment sectors. The prices of highly speculative assets continue to rise. Bitcoin, for instance, has seen considerable gains, and the artificial intelligence-related industries have also experienced a clear boom and a bubble driven by capital inflows. Those who are able to profit from these market booms often become more aggressive in making high-risk investments. As I mentioned earlier, companies like Oracle, which are mainly focused on traditional information technology, have also taken on tens of billions of dollars in debt, nearly $100 billion, to invest in the development of this field. Those who are able to invest in this field and profit from the stock market will, of course, choose to participate actively. However, even those who do not take part in this boom will be affected, because this wave of speculation has simultaneously driven up the prices of various financial instruments. I said that this is a broad-based bubble, with almost all asset classes being affected and rising simultaneously. Therefore, For those who cannot gain huge profits from it, it is necessary to calmly consider the balance between risk and return. These people believe that the current level of risk is quite high. Therefore, what I am referring to is a financial crisis that the United States may face within the next 2 or 3 years. This is not just my personal opinion. In fact, about a quarter of the participants in the market have also noticed this. If you are not predicting that a financial crisis is about to occur, but instead make adjustments only after the crisis has already appeared, then it will be too late to shift your funds into cash afterward. At present, about 1/4 of people have already converted their funds into cash in advance. Even though the market remains at a historical high, no financial crisis has yet occurred, and the bubble continues to expand. They are not predicting a risk of a market bubble burst within the next 2 or 3 years. However, if the bubble in AI-related industries eventually undergoes a correction, it will likely occur around 2027. The exact timing of such a market downturn is indeed difficult to predict, but what is certain is that such a situation will eventually occur. This situation is like an earthquake, isn't it? When a market bubble bursts, it often triggers a chain reaction. Let me explain roughly how this chain reaction works. First, there are the potential risks posed by high-risk speculative assets. Among these, the next to be affected may be high-yield but higher-risk bond products like JONFA. In addition, after 2008, the United States implemented a financial reform measure called the Dodd-Frank Act. The Dodd-Frank Act imposed stricter regulations on large banks, making it more difficult for them to engage in high-risk speculative activities as they did before 2008. Therefore, the most active players in the market at present are actually the so-called shadow banks, which are the financial institutions I mentioned earlier. Specifically, which institutions does that refer to? For example, private credit and life insurance companies are also participating. Life insurance companies, which were originally supposed to focus on stable operations, have now begun engaging in such lending businesses to pursue higher returns. Next, there are numerous hedge funds, and even pension funds are participating. Now, as I mentioned earlier, the financial foundation of the United States has undergone a significant transformation. Hedge funds have always operated mainly through speculation, but now even pension funds are starting to take part. Pension funds are supposed to be relatively conservative investment institutions. Institutions such as life insurance companies and pension funds, which were originally meant to focus on stability, are now gradually shifting to operate in the manner of hedge funds. To give another example, Oracle had originally planned to borrow nearly $100 billion in funds, but later cut the amount by half. The reason is not that it believes the project is risky, but that it cannot obtain enough electricity supply. Because it cannot buy power, it has been forced to cancel part of the plan. So, when it raised these tens of billions in funds, which institutions did it actually finance through? The financing was completed through the assistance of banks in issuing corporate bonds. The banks cannot sell all of these corporate bonds. For the remaining portion, they do not hold them themselves because the risk is relatively high. Usually, they repackage these bonds and resell them to the so-called shadow banking institutions. This refers to market activities that pursue high returns and continue to engage in speculative operations. Hedge funds themselves are institutions that primarily conduct investment operations by raising funds, and therefore naturally become the main buyers of such assets. If a bubble occurs in the artificial intelligence industry in the future, they may respond by repackaging and reselling the related assets. In fact, the operating models of financial derivatives are generally similar. It's just that in 2008, financial derivatives mainly involved repackaging debts related to real estate and then reselling them to downstream investors. In theory, after the United States experienced the last financial crisis and learned its lessons, the next financial crisis should appear in a completely different form. Since the causes of the previous crisis have been thoroughly understood, the relevant institutions have begun to strengthen preventive measures to avoid similar problems from happening again. However, the current situation exhibits characteristics of multiple bubbles coexisting, with the overall scale expanding excessively, indicating that a market adjustment of historical significance may be approaching. Therefore, Even after learning lessons from the previous crisis, no substantial price has been paid this time. As I mentioned earlier, the relevant regulations enacted after 2008 to learn from past lessons were aimed at strengthening the supervision of large banks, such as international financial institutions like JP Chase. Even so, this has made the cash flow of megabanks such as JP Chase relatively abundant, and their debt conditions and leverage ratios have remained within a more stable range. However, now the Federal Reserve and the entire market have begun closely monitoring these large institutions, and there seem to be signs of a desire to make them face more challenges. Not long ago, about 2 weeks ago, a related incident also occurred. The Federal Reserve relaxed the so-called supplemental leverage ratio, SLR, by about 15%. In other words, regulators originally allowed these large banks to buy high-quality assets such as government bonds. Their leverage ratio limit was originally. The ratio has now been relaxed to 23-1. So how much more room does this actually create? The large banks hold about $5 trillion in cash that can be used to purchase government bonds. As for the part 1 mentioned earlier related to artificial intelligence, it belongs to the more speculative bubble segment of the market. However, within the entire system, if one aims to shake the US dollar-dominated financial structure, the greatest underlying risk still lies in government bonds. As the United States' current structural deficit has approached $3 trillion, the Federal Reserve must weigh its policies with extreme caution, as if walking on an increasingly thin tightrope. Therefore, the Federal Reserve released $5 trillion of funds by adjusting the SLR policy. In fact, this move was intended to partially ease the impact caused by arbitrage trading. I mentioned Japan's arbitrage trading situation at the beginning of the program. If Japan's arbitrage trades were to reverse, according to current estimates, trillions worth of related funds might need to be readjusted. This may involve the government bond portion, and according to some professional assessments, related estimates have already been made. The specific details will not be elaborated on for now. According to higher-end estimate figures, about $1.5 trillion in funds may flow back to Japan over the next 2 years from portions that were originally invested in U.S. Treasury bonds. This shows that the Federal Reserve is making preparations in advance. On one hand, it needs to address the situation where the structural fiscal deficit has risen to nearly $3 trillion. On the other hand, it also needs to handle the adjustment of arbitrage trading capital amounting to about $1 trillion to $1.5 trillion. Therefore, he decisively adjusted the relevant regulations and injected about $5 trillion in funds into the government bond market. As for how long this capital can provide support, it can last for about a year. Your fiscal deficit is about $3 trillion, while the scale of arbitrage inflows is slightly over $1 trillion. Based on this calculation, it can roughly sustain for about a year. Over the past 3 years, I have been predicting possible signs of risk in the government bond market between 2028 and 2030, and the time is getting closer. As for my father, having gone from wearing size XL to size M, can he walk normally now? We've been talking about Oracle just now, and I'd like to mention something off topic. The founder of Oracle is Ellison. I've recently noticed that Ellison seems not only interested in seeking investment opportunities in the field of artificial intelligence, but also in learning from Musk's management style. Since Musk acquired X, he has become a prominent figure in political and business circles. Why does this situation occur? Because once media influence is in hand, it can exert a significant impact within the so-called electoral system. The democratic system they speak of is actually centered mainly on elections. In such a system, the factors influencing votes are often not just the voters themselves, but the orientation of the media. As for how the media operates, it is deeply influenced by the power of capital. Therefore, controlling the capital power behind the media is equivalent to influencing the operational structure of an election-based government. Just think, after Musk and Trump had disagreements, why were they able to reconcile so quickly? The key lies in the fact that he owns the platform X. So, why did Musk choose to settle, and why was Trump willing to mend relations with him? Why would this strong-willed and unconventional political figure make such a decision? The reason lies in the fact that Musk still holds crucial influence. That's right. The influence of that platform far exceeds that of the social media he operates. Therefore, to truly grasp the core of the American system, one cannot separate it from the power of capital. The very design of this electoral system makes it susceptible to the influence of capital. Accompanying it is a media system that is likewise dominated by capital. Elon Musk happens to be a perfect example of how this mode of operation is realized. Everything has developed so quickly. It's only been a few years since he acquired Twitter, and now the platform has become one of the mainstream core products, while he himself has become an extremely wealthy entrepreneur. Moreover, his compensation scale is expected to surpass the trillion-level mark. What Meng Yuan just discussed falls under quite a specialized topic. I believe that most people, myself included, can feel that the global financial system centered on the United States is at a historic turning point. Meng Yuan just mentioned that this can be regarded as an era of comprehensive bubbles. This is an era in which past experience can no longer be applied. We are facing an entirely new global financial and economic landscape. This is essentially a structural reorganization rather than a simple replication of past experiences. Therefore, when we face this issue, perhaps everyone needs to cultivate a completely new way of understanding and thinking. Of course, as we discussed today, I would like to illustrate from another perspective how mainland China should respond to and face this challenge. I plan to talk about this topic first. Because time is limited, we may not be able to move on to the second topic today. I also understand that I am better prepared for the first topic. Next, I will spend 2 minutes briefly explaining the part about Allison. It is obvious that Allison is trying to learn from and draw on Musk's approach. In addition, another example is Michael Dell. The first example is the situation where TikTok is facing requests to be sold to an American company. Do you know who reached an agreement with Trump at that time and were preparing to make the acquisition? It was Allison, Dell, and Nordak, that is, the head of Fox News. Now, Warner Brothers, which owns CNN, has also joined the iMind platform. Recently, the American media industry has been undergoing large-scale restructuring and facing widespread criticism. The initial takeover offer came from Netflix, which was entirely based on business considerations. However, later, Trump stated that he would not agree to let Netflix complete the acquisition. Why is this the case? Because Netflix's head is known for having a liberal stance, while CNN is regarded as one of the media outlets most critical of Trump. Therefore, the two sides formed a strong alliance, but Trump did not agree to it. So, who did Trump ultimately bring in to take over? That person was Allison. Allison and Kushner jointly founded a company, preparing to negotiate a price offer with the other party. This shows that, in addition to actively laying out plans in the field of artificial intelligence and preparing to profit from the investment boom, Allison also plans to draw on Musk's experience and acquire influential media assets. I think it would be quite interesting if he ultimately succeeds. TikTok and CNN, especially CNN, used to be among the media outlets that criticized Trump most harshly, but if he were to acquire them, they might instead turn to praising him enthusiastically. Yes, such a change would feel unsettling. This is indeed quite interesting. Next, let's talk about the measures China has taken that you mentioned earlier. Over the past 20 to 30 years, China has been a central force in controlling global inflation. This is because it has deeply integrated into the global production chain through its highly efficient manufacturing system. It is precisely for this reason that the United States has been able to keep the inflation that would normally result from massive money printing and extensive financial operations within an acceptable range. Because those consumer electronic products and similar items have not only failed to rise in price, but have actually shown a downward trend, as I just mentioned. Therefore, from the consumer's perspective, what has actually risen in price are bulk commodities, such as agricultural and mineral products and other basic materials. Therefore, over the past 7 or 8 years, a clear economic decoupling has begun to emerge between China and the United States, and this decoupling has led to one of several important outcomes. The main driving force behind this decoupling lies in the strategic considerations led by the United States, with the goal of curbing China as a potential competitor. However, the side effect of this action is that the United States and countries with similar positions will no longer be able to benefit from the stabilizing effects that once helped curb inflation. Think about it. Could the situation in Taiwan be the same as this? If Taiwan opens up to importing cars from mainland China, the average selling price may rise rapidly. However, the current income growth of ordinary people cannot keep up with changes in consumer prices, which precisely reflects the efficiency problem I want to emphasize. In theory, this should be China's most important bargaining chip. However, as I just mentioned, between 2021 and 2022, the situation was reversed, unexpectedly strengthening China's dual interests. One aspect is the direct economic and trade benefits, while the other is the strategic interest of weakening the dominance of the US dollar, thereby somewhat lowering the dollar's exchange rate. And we've been criticizing this issue here for 3 full years. Has such an effort actually produced any results? It has not produced any obvious direct effect. The issue remains at the level of policy coordination. However, I would like to remind everyone that about 2 or 3 months ago, I criticized stablecoins, and as a result, Onglong Shengli canceled the plan to issue a stablecoin 2 weeks later. So, in a potential crisis that may occur in 2028 or 2029, will Peng Gongshang take public opinion into account, remain cautious about, and reflect upon the title that has been the most controversial in terms of image over the past 80 years? We are, of course, very pleased to see such a development. If Tang Zongxing is willing to take the right actions for the country's democratic process, I would certainly fully support it and be glad to see it succeed. However, given the corruption present in China's financial sector and the influence on people's thinking, it is difficult for us to be completely certain even when the facts seem obvious. The principles I have mentioned can be found to align with my views even in American textbooks that have long been influenced by capital and have undergone a century of revision. In this situation, an adjustment of the renminbi is necessary. When the United States faces serious inflationary pressure, the renminbi must appreciate. This round is indeed a trend of renminbi appreciation. It is indeed an appreciation, but the main reason is precisely the impact caused by the changes in the yen's interest rates that I just mentioned. Canada's interest rates have shifted, and Australia's interest rates have also changed. After the rate adjustments, their exchange rates naturally changed as well. They are now using an averaging calculation formula. Then you must raise yours along with theirs, but the increase will not be as large as theirs. As a result, the actual impact is quite limited. You mentioned the so-called strategic factors, but in fact their main reason is that the economy on the Chinese mainland is still at a relatively basic stage of development, so there is not much room for significant interest rate increases. But I would like to remind readers that this reason, like the related explanation once mentioned by Yi Gang, is not true. Well, because the world's major economies all have to make choices within the so-called impossible trinity. The so-called impossible trinity means that you cannot artificially fix interest rates at the same time. If one wishes to artificially set both the interest rate and the exchange rate while keeping the currency freely convertible, these 3 conditions cannot be achieved at the same time. Most major economies around the world generally choose to set interest rates artificially and maintain free currency convertibility, but they cannot simultaneously fix exchange rates by artificial means. Only China chooses to set both interest rates and exchange rates artificially while restricting the free convertibility of its currency. What does this situation imply? If domestic economic conditions make it impossible to raise interest rates, that's all right. Other countries will naturally respond accordingly because exchange rates themselves are determined by interest rates. China has chosen to make the renminbi temporarily not fully convertible, allowing the exchange rate to be adjusted by the authorities. This explanation is mainly used to justify the policy arrangement to the outside world, and it is hoped that the relevant parties will approach it with a responsible attitude. When talking about China's response strategy, I would like to briefly comment on an event related to China and the US dollar that occurred a few months ago. About 2 months ago, China issued a batch of US dollar-denominated bonds. Some people believe that the nation's stocks and bonds should be issued in Hong Kong. and once they were launched, they were quickly snapped up, with the speed of the sales astonishing everyone. Even more surprising was that their interest rates were even lower than those of U.S. Treasury bonds. Isn't that quite a remarkable phenomenon? From a theoretical perspective, is there a possibility that the United States national debt could become impossible to repay? This is almost impossible to happen because the US dollar is a currency issued by the United States itself. As long as the money supply is increased, the debt can be repaid. At most, the inflation rate would exceed the interest rate, making investment returns less attractive. Why would such a situation occur? In other words, why are the interest rates on US-issued dollar bonds actually higher than those on dollar bonds issued by China? The reason lies in the fact that over the past 3 or 4 years of geopolitical conflicts, relations between the United States and Europe have become tense, and measures such as freezing and seizing the overseas assets of certain foreign central banks have been taken. Therefore, U.S. Treasury bonds are no longer regarded as completely risk-free assets, as in certain circumstances, holders' assets may still face the risk of being frozen or restricted from use. They may freeze or restrict related assets on the grounds of national security. Therefore, countries like Saudi Arabia also have their concerns. If funds are invested in purchasing U.S. dollar bonds issued by the United States, these assets may face the risk of being restricted or frozen if the relationship changes in the future. However, they believe that buying U.S. dollar bonds issued by China generally does not face such risk. In particular, purchasing in Hong Kong carries relatively lower risk. However, from another perspective, is this truly beneficial to China? Not necessarily. From China's standpoint, such an approach actually supports the U.S. dollar market to some extent. The primary strategic goal at present is to weaken the dominance of the U.S. dollar in the global financial system. Actions like this, however, would in fact be indirectly supporting the other side's advantage, wouldn't they? Secondly, after issuing these bonds, it means that a larger proportion of foreign exchange reserves will need to be allocated to U.S. dollar assets rather than invested in other types of alternative assets. This is also a practice that does not align with the overall strategic direction. Therefore, people should not feel pleased merely because of surface appearances. A notable feature of this situation is that the related bonds are quite popular and can even be regarded as a positive sign when their interest rates are lower than those of U.S. dollar bonds issued by the United States. However, from an overall perspective, this approach is actually not very ideal. Next, let's talk about another matter. At the beginning of this month, many finance and current affairs bloggers were discussing the recently held Politburo meeting. They hold meetings on a regular basis and conduct study exchanges afterward. Many people pay attention to which members attended the meetings or are curious about details such as the seating arrangements. In fact, at present, there are indeed 1 or 2 members of the Politburo who have repeatedly failed to attend meetings, and it is rumored that their positions may be adjusted. However, I don't want to go into this kind of topic in depth. The key point is that some financial bloggers incidentally mentioned that the report released after this meeting used the wording international economic and trade competition. They then stated that the tone of the word struggle was quite strong, indicating that the Chinese side is clearly aware of and concerned about the tensions in China-US economic and trade relations and the issue of industrial decoupling. But in fact, I noticed that, based on what I understand, the term international economic and trade competition had already appeared in the summary report of the Politburo meeting held as early as this April. Therefore, as you know, the tariff dispute resumed in April, so this time the Chinese side has appeared more organized and well prepared in its response. Compared with other countries around the world and with its own performance during the 2018 and 2019 round, this time the performance is noticeably more composed and appropriate. This is mainly because, starting from the top levels such as the Politburo, they have approached problems with an active and positive attitude. My only comment is that he merely mentioned international economic and trade competition, but the core nature of this competition is actually related to the long-standing dominance of the US dollar, a point I have been explaining for more than 10 years. The reason the United States holds an advantage in the field of economy and trade is not because its international trade volume accounts for 10% of the global total, but because the US dollar makes up 60% of global reserve currencies. Therefore, on the surface, this economic and trade competition appears to be a confrontation over tariffs and trade, but in essence, it is a deeper contest in the realms of currency and finance. As for policy decisions and implementation, they reflect the leadership's varying considerations and trade-offs in economic strategy. The reason we are still uncertain about the direction Pan-Kong society will take in the next 2 or 3 years is that the leadership emphasizes international economic and trade competition rather than the dynamics of international finance. If the leadership can pay attention to this key issue, I think Gang and Pan-Kong society will not be so relaxed in their subsequent actions. In fact, time is already quite pressing, and we no longer have the leeway to discuss a second topic. No problem, we can leave this topic for discussion next time. I'd like to talk about a more relaxed topic, but still one related to finance and currency. Welcome to this important moment that may affect your financial future. If you missed this wave of opportunities to use artificial intelligence, it's worth revisiting that a year ago on a certain program, I mentioned one of my early articles, which explored the historical narratives from the early days of the founding of the United States. At that time, I mentioned that several legends about the founding of the United States were often quite the opposite of common belief, but people tended to interpret them in a stereotypical way. It also mentioned the Boston Tea Party. I pointed out that this action was actually related to certain commercial interests and did not simply reflect dissatisfaction with tax policy, but rather the conflicts caused by tax reduction measures. After hearing this, everyone felt it overturned their original understanding, right? Textbooks generally say that they protested the rising price of tea because they opposed the tea tax, but this was not actually the case. Later, a viewer of the program said that after checking the information, he did not find any related content, which surprised me greatly. The truth about this kind of matter is actually not difficult to uncover. Their claims are as thin as a sheet of paper. Just by consulting publicly available sources like Wikipedia and digging a little deeper, the truth naturally reveals itself. If you go to Wikipedia to look at the summary about the Boston Tea Party, there's no need to look closely at the details for now, since the content spans 2 or 3 pages, or even 3 or 4, and most people probably don't have the patience to read it all in one go. You only need to look at the summary section on the first half page. It explains that this is a reaction to the 1773 Tea Act. Then someone mentioned that it was to oppose despotism and taxation, but this is actually not true. The real cause of the Boston Tea Party in December 1773 was opposition to the Tea Act of that time. Even the statements from the U.S. side at the time acknowledged this point, and it was mentioned in the related records. You can click the link there to take a look at the contents of the Tea Act of 1773. The Act mainly explains Britain's relevant policies after the end of the 7 Years' War. The 7 Years' War took place between 1756 and 1763, that is, in the mid-1760s. Because the cost of the war was enormous, the finances at that time experienced certain difficulties. Due to financial difficulties, Britain began to impose new taxes on the colonies. Therefore, I do not deny that during the decade before the outbreak of the American Revolution in 1776, Britain did indeed raise taxes on the colonies. What I am referring to is the incident proposed by that doctor, whose purpose was not to raise taxes, but to reduce them. Why was this the case? Because starting in 1764, the year after the end of the 7 Years' War, Britain began to levy more taxes on the colonies. The main increase at that time was in customs duties, since there were no other feasible ways to collect taxes during that period. After Britain began to raise taxes, it triggered a strong public backlash. By 1773, Britain had noticed that public opinion was turning against it, and therefore started to adjust and change its original policy direction. If you look at the Tea Act of 1773, you will find that it indeed included provisions related to tax reduction. After tariffs began to be imposed in 1764, smuggling became rampant, leading to a massive backlog of tea in the warehouses of the British East India Company. Therefore, in 1773, in order to resolve the inventory issue and curb smuggling activities, relevant policies were introduced. These details are clearly documented on Wikipedia in the earlier section. You will find that in the Tea Act of 1773, tariffs were abolished, which subsequently triggered the tea protests. Therefore, such clear historical facts can actually be found explained on Wikipedia. In order to cope with monetary contraction, it is necessary to maintain the stability and growth of funds through investment. There are still people who want to argue with me. I can only smile wryly. Of course, there are simply too many topics online these days that can spark debate. I bring up this matter not to discuss issues related to political parties, but to explain the true cause of the American Revolution. In fact, I mentioned the issue of tariffs on the program, and for the wealthy class, they are hardly affected. If the import tariff on automobiles is doubled, ordinary people and the middle class will have to spend twice as much to buy a car. This expense may account for 1/5 of his annual income, or even as much as 1/3 or 1/2. Wealthy individuals, on the other hand, can easily purchase luxury cars that cost 10 times as much as the vehicles used by the middle class. A super-rich person can buy luxury cars that cost 100 times more than the vehicles ordinary people use, and he can own several of them at the same time. The income of super-rich individuals may be 100,000 times or even 1,000,000 times that of the middle class, so such tariffs have a much smaller real impact on them, with the gap spanning several levels. Therefore, Britain's tariff policy had limited impact on America's wealthy class. At that time, the wealthy were mainly landowners who possessed vast estates. So who exactly were these landowners? They were precisely what the United States calls the Founding Fathers. They were the main representatives of the landowning class in the 1770s, such as Washington, Adams, Franklin, Madison, and Jefferson. Those whose names can be mentioned are all regarded as the Founding Fathers of the United States. The country does not have a single Founding Father, but rather a group of founders known as the Founding Fathers. Most of the Founding Fathers of the United States were landowners with vast estates, and these landowners were not particularly concerned about tariff issues. Therefore, the discontent of the middle class caused by these tariffs was actually one of the outcomes, and this sentiment was largely guided by the media. This was merely an excuse to stir up middle-class emotions. So, who was controlling these media outlets at the time? Behind these media outlets were actually large landowning classes in control. So, why did these great landlords intensify social class conflicts and pave the way for revolution? What losses did they actually suffer? In fact, this had no direct connection with the tariff issue. The real reason lies in the fact that the early 13 North American colonies once had the power to issue their own currency. What they issued at that time was not the real pound sterling, but a type of currency called the colonial pound. Subsequently, starting from 1751, the British Parliament began to impose restrictions. By 1764, as I mentioned earlier, after the end of the 7 Years' War, Britain faced financial difficulties. Therefore, starting that year, it began to impose tariffs and at the same time took back the colonies' right to mint coins. In other words, the colonies were prohibited from issuing their own currency again. This measure led to a tightening of the money supply, resulting in a sharp drop in the prices of bulk commodities, in some cases even by half. So, which industries or resources did the economy of the American colonies mainly rely on at that time? This mainly refers to bulk commodities such as agricultural products, furs, and minerals. When the East India Company went to the Americas to purchase these goods, prices fell sharply due to monetary tightening, and those who ultimately suffered losses were large landowners like Washington. It was precisely because of the Coinage Act of 1764 that many large landowners began to develop rebellious thoughts and started funding the media. These media outlets then used the issue of tariffs as an entry point to stir up discontent among the middle class, and subsequently launched actions under the pretext of restricted freedom. Therefore, financial and monetary issues were regarded as top priorities even during the early period of American independence. China should gain a deep understanding of and draw lessons from the insights this period of history offers. All right, that's all for today's content. A few years ago, I was still an engineer. At that time, I was thinking every day about going to Singapore to have shirts custom made, until one day I saw this. Very good. Although we didn't get to discuss the second topic we had originally prepared this time. That's all right. We'll continue our conversation next time. However, as Meng Yuan just mentioned, by 2025, if the new U.S. government takes office and its leaders once again adopt policies from the Trump era, there may be large-scale pressure applied through tariffs and trade measures. I completely agree with what you just said. Looking back at the year 2025, I believe that China was the most successful country in the world in responding to the comprehensive trade measures of the United States. Moreover, judging from the current response situation, the overall offense and defense are well coordinated, and actions are clear and orderly. Therefore, in the first stage of international economic and trade competition, China successfully held its ground and performed quite well. However, after 2026 and 2027, there may be another difficult challenge, and everyone will need to be well prepared in advance. By then, the focus will not be limited to the economic and trade sectors, but will also extend to the financial sphere. Therefore, more comprehensive preparation is needed in this regard, as China has long adopted a cautious and prudent approach in the financial sector with an overall tendency toward conservatism. This is, of course, related to how familiar the socialist system is with the operation of capital, and it still requires a certain process of learning and adaptation. However, this stage is ultimately unavoidable, and everyone can prepare in advance. All right, due to time constraints, Meng Yuan and I have already talked for an hour and a half today. We didn't have time to discuss the second topic we had planned, so we'll leave it for next. I'd like to thank several audience friends for their support: Brock, Lin Mingyi, Lu Zuanchong, Zhong, and Zhou Xian. I sincerely thank you all. May I ask if Dr. Wang has paid attention to the incident of MIT researcher Nuno Lorenzo being killed at home? That falls under the category of a private matter, and I haven't paid particular attention to it. He also mentioned the latest developments in the field of nuclear fusion. I had discussed this part privately with Meng Yuan before, but it was not mentioned today. It was actually because Xianglong sent me an email on Monday, which reminded me of the second part of the content I had originally prepared. The email Xianglong sent mentioned that Musk publicly stated the idea of engaging in nuclear fusion power generation is unwise. That's right, that was just a deceptive claim. I heard about this from Wang Min a long time ago. After all, the sun itself is a natural source of nuclear fusion energy, right? It's enough as long as we make good use of the energy released by the sun. I have 2 points about this. First, Musk is still willing to speak his mind even without having invested in the related projects. Everyone can observe carefully that the projects he invests in often share this characteristic. Secondly, this statement did not come from him, because the controversies and doubts about nuclear fusion have existed for more than 70 years. Since the 1950s, the first wave of related controversies has emerged. Then, during the discussions of the 1970s and 1980s, as well as the third wave in the early 2000s, people have repeatedly pointed out this phenomenon. However, these events are often forgotten afterward, because the general public are not professionals and their memories fade easily, which is indeed regrettable. Therefore, let's conclude this topic for now. I think we can continue with the second issue we originally planned to discuss next time. That's right, we'll have a more in-depth discussion next time. All right, next, thank you Feng Yue. He mentioned that in the July program there was a discussion about Trump's shifting stance on the Epstein case, which indirectly suggests that he may have reached some sort of agreement with the so-called forces behind the scenes in exchange for being able to extricate himself from legal troubles after leaving office. In recent days, according to Wiles's latest updates, the White House Chief of Staff has defended Trump's position on the Epstein case, while praising Rubio, who is supported by Newcomb, and criticizing Vance from the MAGA camp. But I have verified this observation again. In addition, it was mentioned in the September program that the U.S. Department of Defense's move to rename itself the Department of War is related to its strategic adjustments in the Western Pacific region. Meng Yuan also mentioned this just now. Alright, next, I can't quite see the text after the word peace. Dr. Wang is giving a lecture, so please listen attentively. Then, thank him for expressing appreciation to Dr. Wang and Xianglong for the coin analysis they conducted over the past year. I hope that in the future everyone can continue to work hard and move forward safely and smoothly amid the great changes of our time. Next, we'd like to give special thanks to our viewer. This is already the third time they've sent in a message. Next, we'd like to thank Bowling Lee from Big Bad Bowling for his support of village folks around the world and Dr. Wang, and also thank all the audience members for their enthusiastic participation. Alright, Mingyu, do you have anything else to add? I think that matter has actually been explained to quite a large extent. Trump himself was not directly involved in those incidents. He acted mainly out of consideration for helping a friend. As for whether this friend is an old acquaintance or a new one, we are not yet sure. He put pressure on that report and changed the promises he made before the election. This is because he reached a compromise with certain people. What those people are truly worried about is that all the data might be completely disclosed. The subsequent situation is actually quite complicated. Because in this matter, he actually caused a serious divergence from MAGA. He later felt regret, and MGA has already chosen to resign. In any case, regarding this revelation about the White House Chief of Staff, I believe he did it with a specific purpose in mind. I think this is merely a tactic to divert attention when the truth behind the entire incident is about to be exposed. There will definitely be further developments to come, and it will not end with just this round of intense media coverage. Thank you very much, everyone. Now we're connecting with Wang Mingyan, who is currently vacationing in Taiwan. He's now in Tainan. I just saw that he's dressed very casually, even wearing short sleeves. I asked him, "Aren't you usually on the east coast of the United States, where the weather must be quite cold?" He said no, Tainan isn't cold at all. Yes, I still remember he mentioned to me last month that he was going back to Tainan. Alright, many thanks to Mingyan, and thanks as well to all the viewers and listeners. Today, Mingyan mainly talked about the financial aspects of the United States. When discussing issues related to the U.S. financial sector, everyone needs to pay close attention. If there are parts that are hard to understand, you can listen a few more times. I'm sure you'll gain something from it. Thank you, Mingyan, for your sharing, and we'll see each other next month.
See you next time.